Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How's everyone doing this morning? Good morning, Patrick. Hey, Royal Palms. I did send you the Discord link last week. If you haven't used it already, it probably expired. If you need to reach out again, it is support at pathtradingpartners.com. Or you can just go up to pathtradingpartners.com website and go through the contact us thing, and I will get a notification. Good morning, Rims of Fall. So far, quiet morning. We got Lagarde speaking right now, ECB president. So that's could potentially get a little volatility in the markets. We have the Dallas Manufacturing Index coming out at 9:30 Central. And then we have Fed speak. Bullard and Williams at 11 Central. Good morning, Connor. Good morning, Sterling. Hope everyone had a fantastic weekend. So, stock market map this morning. Apple down pretty sizably out of the warning that iPhone Pro shipments, because of what's going on in China, and their plant there could miss by about 6 to 9 million units. That's pretty substantial. Oil broke down again overnight with what's going on in China and potential demand with the lockdowns. So we will take a look at that. Other than that, I'm surprised Tesla is a bit lower this morning after the pump attempt with the semi pump event coming out on the 1st of December. I think I have that right. Other than that, Amazon up a little bit. Cyber Monday. Happy Cyber Monday. Looking at everything, most things are down this morning. If I refresh this, energy, I guess real estate's up 0.04%, so 4 basis points. Energy taking it in the shorts right now. Fed watch. Still about, this is pulling back 70% for the 50 basis point, 30% for the 75 basis points. So this is creeping back up again, but not at a level that means anything just yet. Remember, Powell is speaking on Wednesday. J-Pow. We're still in greed mode. We will take a look at everything else. Good morning, Options 22. Good morning, Anissa. Resorts Casinos up in response to licensing. Thank you for that info, Patrick. Gamma, we're pretty much right at neutral gamma. Gamma flip, we're slightly below it this morning. We traded off support at 4,000, but anywhere in this area is not much negative or positive gamma. But rallies continuing in will dampen. The rallies will be dampened, but sell-offs, because it will dip into negative gamma, that can be amplified. So remember that if we really start breaking down, we do have that potential double top in the S&P, but if we start breaking down and triggered, it goes deeper into negative gamma. And remember, negative gamma reinforces the move. So that would be reinforcing a down move, potentially. Do keep that in mind. Not much going on with earnings at all today, so just not going to focus on that. All right, we got that out of the way. So this is the mini little double top I'm talking about. So far, we have pulled back to the daily rotation zone and holding right around this 4K area right now, 39.9875. If we start dropping below about 39.90, I am focused at 39.8075, which is the 50% move from this last little run up. On a key closing basis, on the daily close, is about 39.64 area, because why? If we close below that, I'll watch for a retest of the 87.5. So that would be 39.32. and that would take us to the bottom of the rotation zone. The double does not trigger until we get a close below 39.1250, and that could be a pullback to about 37.74. We did gap down in the futures last night, so on any rally, remember we've pulled back, we're holding a key level right now. Little thing I'm watching about off the open will be a 4,010 area. We have a little resistance shelf up there. Then I'll watch for the gap open price coming in at 40.20. And then we'd have the gap fill. The technical gap fill is to 4,034. That is the upward price magnet. By the way, I did take it just for the point of clarity. I took we hit 1, 2, and came within 9 points of the final target from this double, this inverse head and shoulders. Right now, I took off the background and just put up a line there. That's why there's just a red line there. So if you're going back and watching the old video, it's changed from the background shading to a red line. Overall, you know, we got cycles trying to roll over on the daily. On the weekly, they are at the, if I get the weekly chart up there, they are at the top and trying to roll over. So once we start getting some downside momentum, it could get interesting. Yes, there are ways to front run this pattern with some, if you want to keep your reward to risk really favoring a downside bias. So keeping tight stops up here, especially if we do get a daily close back above 40.60. Why? That would be above the 200 and we could easily make a run to 41.20. So if trying to play and front run a rollover move with cycles at the top, I keep personally very tight stops. All right. What would be interesting is if we can get a partial gap fill and then or at least the gap fill and then the rollover play, since it's already now softened the rotation zone a couple times, could get interesting in structuring some option spreads to target this lower area and then roll it into a bigger double play would be the way I'd approach it. We may have not hit the daily 200 SMA, but we did hit the 50. Yeah, we did. We did hit the 50. I did talk about that in a video. And remember, that is an area for the 200. We're within shooting distance of that 200. So anywhere up here, being with that other top, I'm just watching to see once these cycles really start rolling over, and it's going to depend on how today closes. Happy Move Down Monday. It's now George's. Welcome, George. It's Move Down Monday. So that's where we sit there. NASDAQ, remember we did not have a double. Right now, the key play to the upside, if we start breaking above about 11,735, is to the gap fill. So 11,735 is what I'm going off this morning. And then the gap fill would be 11,782. In order to get, I got to check one thing here. I do have to check one thing real quick. Wrong way. Hold on one second. The key area on a closing basis, and that would be a 4-hour closing basis, 11,645.25 would invalidate this little mini double bottom that triggered last week. You could do a 1-hour closing basis or a trade through 11,600 roughly. Invalidates the little mini double that was triggered on Friday, with the little run up on, was it? No, I'm sorry. It was triggered on Wednesday. So other than that, that is not off the table still yet. Otherwise, what I'm watching for on any push-up move is this to also make a potential double top in here. Let's take a look at the spiders and the Qs, and then we'll loop back to other markets. Spiders 399 looks like pre-market right against right in front of the rotation zone. Rotation zone coming in about 397.60 area. So that's also the opening high area from Friday the 18th and the rotation zone. So that is pretty key support. Write down, watch that key area. Below that, if we start trading, we still technically have a gap fill down to 394.59, and then the major support coming in. Yes, there is a potential double top in that, and that would need a close below 390.14, and that is the bottom of the rotation zone. So there's a lot of key support still coming in here. On a rally up, if we hold this 399 area, 400 is first level of resistance, and then it's the gap fill to 402.33. Above that, you have major overhead resistance right in front of that 405 level. The Qs. Gap down to 84.87 where we're looking right now. Key support is just trading below that. Key support's at 285. So technically we're below that, but if we get above that, that's going to be the level I watch on the open. And then the next major level of support, minor, is about 283.60. Majors coming in at 282. On the rally, runs above that 285.25 area. The next target up is back to 286.92, and then 288.40 are the key targets. The Dow pullback level is about 33,980 to 34K. That's your key targets. If it does break below there, 33,750 is the next key levels, and then nothing back till about 33,200. Rally would be to the little gap, the gap down. First key level on a rally would be 34,321, and then to Friday's close, 34,378. The Russell, the key target to the upside is the gap open. The gap open, 1867, and then to Friday's close, 1872.50. Trading against some pretty decent support, this 1856 level. The next level support's not down until about 1840. DAX finally getting the rollover move, trading against this 11,375 support. If it does break below there, next major support isn't back till just in front of 14K. The minor support area I'd be using is about 14,200. Notes. Yes, running up, coming within a 32nd of the first target. So that I'm considering pretty much hit. The double top is still in play. Other than that, support now coming in about 112.21 on a down move. But this is definitely, if it hasn't been done already, raise stops on the notes. And they could even be raised more aggressively because there is a double top pattern if that is going to be triggered. The technical stop level for the very conservative stops is all the way back at 110.19. Let's just go through the VIX first. I talked yesterday about it trading against key long-term support. Do I think we'll just rocket ship this up? No. I'm going to be watching for the rollover play. If we do break down and get any bullish move, the rollover play would be back down below 21.97 and then watching how much of the gap fills. The gap it would fill, and that's not just for today. The full area won't be for my full target won't be for the full gap fill. It will be for about 21.10 first. We could be building a base, as I talked about last few times it's reversed. We have built key bases. It's not just rocketed up. We've had some moves more dramatic than others, but we've had multiple retests of the support area. So far we have the down move on Wednesday, little base there on Friday, the gap up today. So I'm going to be watching how it reacts with this potential gap fill. If we do get a partial gap fill, then we have a key pivot point above already today's established high at 22.50 to watch for. Now, dollar index. Tagging the 200. Yes, the potential double is still in play. The key breakdown area, though, is about this 104.25 area. We start breaking below that. That could be a significant shift in the dollar index. We got the 50 on the weekly right there. So we start breaking back below there. We could pretty much watch for a bigger retrace of the dollar index, and that would be a substantial top. The next areas would be 101.95, then 98.75. So do keep that in mind. We have not broken that key support yet, though. From the euro perspective, euro trading against the 50-week. Also, we do have a potential double top on that daily that is in play on a close below 102.22. So that's the next level. If we do continue to rally up, which would invalidate the double, the next target is 106.30. The pound. Key support is pulling back a little into this mini flagging pattern, this mini channel flagging pattern sitting against that 4-hour rotation zone. If it does pull back a bit more, I'm going off about 119.70 for the next level of support with the daily rotation zone. Then if we broke down that below that, the major support is 118.20. Bitcoin getting some pressure again. You can see here, not been able to really sustain much into the daily rotation zone. Also, Bitcoin has not even been able to return to the weekly rotation zone. I'm still watching for the next shoe to drop in this, and I'm thinking it's coming sooner than later with a lot of behind-the-scenes scrambling to transfer stuff around in the cryptoverse. So don't get caught off guard with that. Tesla, you got the Tesla semi-pump event. So far, a little gap down. The gap play would be to 182.86, a rally above that if the rally does continue this week. The top of the rotation zone in the prior major resistance is coming in about 195. Do not ignore if it does roll over, there is still a gap. Now, long term, I'm still bearish on this. Especially once we get the semi-event out of the way. The first breakdown major thing would be to this pretty decent rally bar from back on the 23rd. The opening price on that, 173.57. And then it would be the target for the gap fill at 168.63. Crude. The double, yes, is still technically in place. It came very close to invalidating it, but nothing yet. If we do start trading through today's lows, remember our overall target area for the longer pattern is still 70 bucks. And we should see some decent support around there. Between $70 and $71 are my key levels. The only thing that would get me short-term bullish is if this double now does trigger, but that's a long way off. Good morning, Rod. Thank you for being here. So keep an eye also. Apple, I covered this yesterday. Apple is now, the key support is about 144.80. We're trading 145 pre-market. So pay attention to that to see if this holds today. And that would be on a daily closing basis. You start getting a close below there. We have the gap all the way down. The gap fill technically is 134.87. But before that, I would target the 138.50. If we do hold this pretty key support level, though, I'm watching for a potential gap play first. The gap play would be to 148.11. So Apple's trading in a very key area and breaking down, being that its mega cap status could be the warning sign that we're starting to put in that top on the, at least a short-term top on the S&P and NASDAQ. So that's one that I would keep on your radar, even if you're not trading it, because it will help you see what else is going on. Also, just point of complete NVIDIA, slight gap down today, so there'll be a gap play in there. Key support, though, is back at 158 area. We break below that, it would be potentially a pretty quick trip down to right in front of the 150s, and then we could roll into a double top. Other than that, watching on any strength in the open for that gap fill play. Good morning, Christoph. Yes, there is a Tesla semi event on, I believe it's December 1st. So that's where we sit. It's going to be a very interesting week. Remember, if you did not catch my overview yesterday, things are backloaded this week, especially with cycles potentially rolling over in the next couple days. We have, just to remind everybody, we have on the 30th, being Wednesday, we have the GDP numbers coming out, some PCE numbers coming out. We got the JOLTS job openings minor, but we have Powell speak, the big one in front of the Brookings Institute. So that's going to be big on Wednesday. And remember, then we start going into the quiet period before the rate announcement. This does not start the quiet period. I believe it starts after Friday. I'll have to double check that. And December 1st, separate from the Tesla pump event, you have, more importantly, core PCE, and you have jobless claims, and you have more Fed speak, and you have ISM manufacturing PMI. And then Friday, we have non-farm payrolls, so don't get caught off guard going into a week with some very toppy price action. With that, let's just peek back at the S&P going into the open. Going into the open, little shorter term chart, keying against this very major support right now. So going into the open, miners about 4,005 is a little breakout area going into a clear path move to the upside on the very short term. The breakdown area would be roughly this 39.95. I will be back after the close. Yes, it is going to be a fun week. Make sure you manage your stops, as we could be putting in some more topping price action. Know where your trailing stops are for any key positions. And I will talk to everyone later. You are welcome, Dave. All right. Trade well, trade safe, and have a great day.